Welcome to the deep dive. We're tackling something pretty significant today, looking at all the news you shared about recent minimum wage increases across the U.S. We're focusing on April 2025.
That's right.
Our goal here is really to kind of cut through the noise, look at the key insights, and figure out the potential impacts for everyone.
Yeah, exactly. And it's more than just numbers going up. It's about the different ways states and cities are handling this.
Right.
You saw a real mix of strategies in April 2025, a lot of it driven by, well, inflation, obviously, but also this push to improve things for lower wage workers.
Yeah, definitely seeing that push. It wasn't just one single federal move or anything.
Not at all. State and local adjustments were really the story.
Okay, so to make this less abstract, let's zoom in on some key examples. Show what's actually happening on the ground.
Good idea.
These changes really affect people and businesses directly. So maybe let's start out west. California seems like a big one.
Absolutely. California's fast food sector. That was a major headline. On April 1st, 2025, the minimum wage just for those workers jumped.
Jumped how much?
From $14 to $20 an hour.
Wow. Okay. That's a huge leap, especially compared to their regular state minimum wage.
Right, which was $16.50 at the time. So yeah, $20, it's significantly higher.
So a full $6 bump specifically for fast food. What's the thinking behind targeting just that industry? It seems quite specific.
Yeah, it is. And that's kind of the point, I think. It suggests they weren't just doing a standard cost of living thing.
Mm-hmm.
It seems like policymakers looked at the fast food industry itself. Maybe its growth, its profitability, the kind of standardized work,
Right.
and maybe the limited wage growth potential in those jobs, and decided a specific intervention was needed there.
Interesting. So a very tailored approach. Okay, let's shift gears. What about Michigan? Their approach sounded, well, different, more gradual.
Yes, Michigan's a really interesting case.
Mm-hmm.
Definitely a compromise there. Lawmakers agreed to increase the tipped minimum wage, but gradually.
How gradual?
The plan is to get it to 50% of the standard minimum wage, but not until 2031.
2031. Okay, so that gives businesses a long runway for tipped staff.
Exactly. But the standard minimum wage there also went up in April 2025.
It did. Okay.
Yeah, it rose to $13.73 an hour. And importantly, there's already a plan baked in to get it to $15 by 2027.
Gotcha. So steps along the way, phased in.
Right. A multi-step process.
And I think the sources also mentioned paid sick leave. Was that part of the same deal in Michigan?
It was, yeah. And that's actually quite significant. Including paid sick leave accrual alongside the wage hikes, it points to a broader goal.
Broader how?
Well, it's not just about the hourly rate. It's about improving, overall job quality, security benefits for workers. It's a bigger picture view.
Right. More comprehensive. Okay, so California, big targeted jump. Michigan, gradual, broader package. What about Washington, D.C.? They always seem to be at the top of the list.
They still are. As of April 2025, D.C. held onto that top spot, $17.50 per hour.
$17.50. Wow.
Yeah, it's notable. And D.C. has consistently been a leader in this area for a while now.
And the main reason for that high rate in D.C., it's pretty much tied to the cost of living there, isn't it?
Correctly. Yeah. The cost of living in the district is, well, it's very high compared to most of the country. Housing, basics, everything.
Mm-hmm.
So that $17.50 is seen as necessary to get closer to a living wage, what people actually need to earn to cover basic expenses there.
Okay, that makes sense. So we've seen these different state and district approaches. Let's zoom out again. What are the sort of big picture economic ripples we might expect from these kinds of increases generally?
Well, one potential positive is a boost to consumer spending.
How so?
When lower-income workers get a raise, they tend to spend that extra money, often locally. They're less likely to save it compared to higher earners.
Right. It gets injected straight back into the local economy.
Exactly. Which can help businesses, potentially spur some growth.
Okay. That's the potential upside for spending. But what about the businesses footing the bill? Higher labor costs must have consequences.
Oh, absolutely. Businesses have, well, few main ways they might react.
Like what?
One obvious one is passing those costs onto consumers through higher prices.
Yeah.
So potential inflation.
Okay.
Another is managing labor costs directly, maybe reducing employee hours, unfortunately.
Mm.
And a third, which we hear a lot about, is investing more in automation. Self-checkout, robot cooks, that sort of thing.
Right, the automation angle. Do you think these wage hikes significantly speed that up, pushing businesses towards tech?
It's a very strong possibility. I mean, the math changes,
Right.
right? As human labor gets more expensive, the return on investment for automation looks better.
Yeah.
And like we saw with California targeting fast food, the impact isn't even across the board. Industries like retail, hospitality, anywhere with lots of minimum wage jobs,
Mm.
they'll feel it more.
Makes sense. And the million-dollar question, I guess, jobs. Do these hikes kill jobs overall?
Uh, the big debate. Economists don't fully agree, as you might expect.
Yeah, great.
Some research suggests modest increases don't cause major job losses. But
Yeah.
it really depends. How big is the hike? What's the local economy like?
So context matters a lot.
Hugely. Businesses in, say, a booming area might absorb the costs easier than ones in a struggling region. That $6 jump in California fast food, people will be watching that very closely for employment effects.
Definitely one to watch. Okay, let's shift to the policy side of things. What are the big considerations for lawmakers thinking about minimum wage?
Well, a fundamental challenge, especially in the U.S., is just how much the cost of living varies place to place.
Right, $15 an hour means something very different in New York City versus rural Mississippi.
Exactly. So a single national minimum wage can be tricky. It might be too much burden in some low-cost areas and still not nearly enough in high-cost ones. Policy needs to somehow account for that reality.
That geographic variation is key. I also saw mentions of indexing wages to inflation. Can you unpack that a bit?
Sure. Indexing basically means tying the minimum wage to a measure of inflation, like the Consumer Price Index, the CPI.
Okay.
So as prices for everyday stuff go up, the minimum wage automatically adjusts, usually annually. The idea is to maintain the wage's actual purchasing power over time.
So it doesn't lose value year after year.
Precisely. It avoids workers effectively getting a pay cut just because of inflation. And it takes some of the politics out of it, makes adjustments more predictable. Several places already do this.
Seems sensible. Now, what about small businesses? They often raise concerns about being able to handle higher wages. Are there policies to help them?
Yeah, that's a really common concern, and policymakers do think about it. There are ways to potentially cushion the blow.
Such as?
Things like targeted tax credits for small businesses to offset the increased payroll costs, or maybe subsidies. Sometimes it's about providing resources, like training, to help them improve efficiency.
So trying to balance supporting workers with keeping small businesses viable.
That's the goal. Yeah, it's a
Yeah.
balancing act.
Okay. Now, just to get a bit of outside perspective, you shared an article about the UK also raising its minimum wage around the same time. What can we learn from that?
Looking internationally is always useful, seeing how others tackle similar issues. So yeah, in April 2025, the UK government hiked its national minimum wage by 6.7%.
Okay. What does that work out to?
It reached £12.21 an hour, which at the time was roughly 15.84 US dollars.
1584. That's pretty high on a global scale, isn't
It
it?
definitely puts the UK up there, higher than, say, France or Germany. It shows a clear commitment from their government to boost low-end pay.
But I imagine, just like here, that kind of increase probably sparked some debate among UK businesses, concerns about costs.
Oh, absolutely. Same conversations, really. While workers benefiting welcomed it, some business groups voiced concerns.
About?
The impact on their operating costs, especially for businesses relying heavily on minimum wage labor. Worries about having to raise prices, maybe slowing down hiring, finding savings elsewhere.
Yeah.
Usual pressures.
So the fundamental tensions seem pretty universal then. Okay, as we start to wrap up this deep dive into these April 2025 changes, what are the main sort of takeaways for you?
I think the biggest thing is just how dynamic this all is.
Mhm.
Minimum wage policy isn't static. It's constantly evolving here and globally.
Yeah.
It reflects these ongoing debates in society about what's fair, how to balance workers and businesses, how to get sustainable growth that, includes everyone.
Absolutely. It's clearly not a settled issue, and these changes in April are just one snapshot in a much longer story.
Right.
And it feels important to look beyond just the wage number itself, doesn't it? Think about the wider ripple effects.
Exactly. We have to consider the broader stuff. How do these changes affect poverty rates,
Yeah.
income inequality? What's the impact on the overall health of the economy? It's all connected.
Okay, so as we finish up here, maybe something for our listeners to chew on. We've seen these different paths. California's targeted hike, Michigan's phased plan, DC's high benchmark, even the UK's big increase. What do you think the most significant long-term consequences might be? Not just for the workers and businesses right now, but for the whole economy down the road.
Hmm.
And maybe what lessons can we learn by watching how these different experiments play out in different places? How might that shape future decisions about wages and, well, the future of work itself?
That's the crucial question, isn't it? Lots of track going forward.
Definitely a lot to consider. Thanks for joining us for this deep dive. We'll be back soon with another exploration of the forces shaping our world.